Hello, Maverick Currency Traders. It is the Currency Room from December 7th to December 12th. This is Rob Reinhold. I'm joined by Ankit Sharma. Let's go ahead and jump into it. In this session, we're going to be going through the week that just happened. We're going to go back through all the numbers. We're going to take a look at all of our currencies, score them from +3 to -3. And I'm telling you what, we've got some really good things happening in the Forex market. And it's been pretty dead for the last week or two. I really like this trading market going forward.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
So let's start off with equities. Equities had that big bounce in the Thanksgiving week, and it's holding those gains. And not just holding those gains, but actually adding into those gains. We've had a pretty strong week this week after a huge 5% move in that week of Thanksgiving. So when the market jumps 5% and it doesn't give anything back, it's pretty much telling you, hey, this thing's going higher. Looking at the dollar, we've broken that uptrend, and we're going to see that there's been a lot of currencies that have been almost what we call bulletproof. They actually are starting to roll over, and it's giving us a good indication that there could be some major trend changes happening. And when major trend changes happen, these things last for months, if not even years. And we're going to take a look at some of those. We do have a Fed meeting this week, and the market's already pricing in a rate cut. And the poor cryptos, oh boy, cryptos, they had a little rally off the bottom, but they rolled right back over. We'll take a look at those charts, but they are not looking great. As far as economic reports go, I want to point out a couple. I really don't want to get caught in the weeds with the stuff that doesn't matter. Yes, we got some US data. We got weak employment data. We got weak manufacturing data, but then strong services data. And then we had these really low unemployment claims. And I know that the US gathers a lot of attention because of how much the dollar runs everything, but there are a couple reports that are just huge. Look at this Canadian employment report. Now, look at your Canadian. This number is just amazing. This is an amazing number. A 0.5% drop in the unemployment rate. What do you think is going on in Canada? Give us your Canadian insider.
Hey, Rob. Well, I must say that, one of the things that we've seen out of Canada is their rate cuts. We have seen some, we've seen the rate cuts have kind of bring a lot of things down to a very normalized rate. And that's what we got from Bank of Canada last meeting as well, where it said, hey, we're getting to the range where we might not even do more rate cuts. And this really solidified that premise, because now we have Bank of Canada coming up next week as well, and they're not expected to cut rates anymore. So I think it just creates, the opportunity where a lot of the weakness has already kind of come in and priced into the CAD. And now with this report, the expectation is more on the hold to a bit more on the hawkish side. Now that is going to create more opportunities for the CAD, which has been struggling for the last few months. So definitely a big sort of a boost on the top of what we're seeing in the economic numbers.
The two other reports I really want to spend time on is this Australia GDP report. It was very disappointing. Came in at 0.4, it's supposed to be 0.7. The Aussie went up. Remember, we talk about this in Maverick all the time. We use the term sentiment. When good news comes out and something goes down, it tells you, hey, nothing can save this, it's going down anyway. When bad news comes out and it still goes up, it's telling you the money's pouring into it, that they don't care. They're looking through this report. So this Aussie GDP report, where it really looked pretty disappointing, and it doesn't look great at all, the fact that the Aussie rose on that makes the Aussie one of my favorite currencies, because now any little bit of good news on Aussie, and it's going to soar. Because people have already said this is probably the worst we're going to get. The other one I want to talk about is Swiss CPI. We do have the SNB this week. Remember, they're only 4 times a year. And look at that number, -0.2. The Swiss franc has been one of the strongest currencies out there. And a strong currency is not great. for a country. Like when it's that strong, it actually really helps to push some prices the wrong way. So I know the S&P is probably looking at this meeting, and I think the market's anticipating that there might be a change for the first time in years with what the S&P is going to say. So let's take a look at the final numbers for last week. We've got the S&P up slightly, the world index up slightly, crypto, I know that's, it was up for the week. No, it was really nasty. It had a really great bounce, but that bounce completely rolled over. Gold down a little bit, oil was up. Let's go ahead and take a look at this S&P chart. We've got a really nice ABC correction here. For any of you who are LA Wave people, we've got A, B, we've got A, B, C, where we just take a little break and then we get this bounce back up. And really, once we break through this level, that tells you, hey, it's likely to hold. And you can see we didn't even pull back. We high based. And here we are closing really close to all-time highs on Friday on the S&P. So equities are happy. Everyone's happy out there in the world. And when we take a look at the currency market, we're seeing some things crack that have been really bulletproof here for a long time. First of all, the Swiss franc was the worst currency of the week. We'll take a look at a chart, and for the first time, the Swiss franc looks like a good technical short. The dollar for about the last 6 months has also been a one-way trade. It's just been up and up and up and up. We'll take a look at this chart, and you can see that it is going to be a little bit breaking down. And then we had like the Aussie and the Kiwi were one-way trades to the downside, and they seem to have turned as well. Take a look at this jump in Canada. This was all on Friday. The CAD was actually weak for the first 4 days of the week, and we had a jump up. We'll have to see if that has any follow through. But my favorite short, the yen, remains weak. It wasn't as weak as everything else this week. It mostly low based, but I still like that yen to the short side. So as I said earlier, we are seeing some major things change in the Forex market, and major changes always bring major trading opportunities. So I'm very happy to see that. In the world of crypto here, you can see Bitcoin down, Litecoin down, Bitcoin Cash up. Pretty much a flat week overall, but we'll take a look at the chart and you'll see really big bounce early in the week, and then it just rolled over and died. That's a good sign that it's not ready to go into an uptrend quite yet. Okay, so we already looked at equities. Let's take a look at the US bond market. Now, this is something that Ankit and I had been talking about quite a bit. The first rate cut we got was somewhere, I can't remember, somewhere middle September, late September. So remember, the markets always anticipate rate cuts. And then we got another rate cut in October or early November, somewhere in here. We're going to get a third rate cut here next week. In fact, here are the odds. The current odds of a rate cut are 87.2%. So we have an 87% chance of rate cuts. But take a look at this. We're basically going to have 3 rate cuts, and the bond market yields have not gone down at all. Ankit, what do you think about this phenomenon?
Yeah, I mean, I'm glad that you pointed that out because, this is something that's a bit of an alarming sign because, a lot of times when we look at the markets in hindsight, inflation has been an issue. Now, there's a period in between where, it didn't seem like it wasn't a big issue. But then when you look at the yields, and I'm not just talking about US yield, but you take a look at global yields, there's a common trend that we're noticing is a rise in those yields, and that's across the world. And this is a good example of the bond yields are, especially on the longer end of it. It's the markets that decides it, not the not the central bank. And that's what we're seeing. Japan. Look at that. The yields are rising. Look at New Zealand. I mean, you can look at that trend. Markets or economy was pretty weak. And then as we're seeing a change in that trend, we're seeing that's going up. Now you're wondering why Aussie so strong. I mean, take a look at that. Like, look at the strength in the yields here. Even the European yields, every yields across the world on the major central banks that we follow are actually going higher, except the Switzerland. I think Switzerland's still kind of holding it back. But this really explains the movements that we are seeing in the markets. Now, when we study all these numbers, I mean, now we can see why Aussie is so strong. We can see why Kiwi is strengthening, and we can see now why CAD is strengthening. Rob, if you want to pull up the Canadian just the yields for today, if you look at a 15-minute chart, I just want to show everyone where take a look at that 1 day percentage change. Now that really changes those things. When we get stronger economic data, well, what does that mean? That means the yields are going to go higher. So, and I think that's really where we are. The economies are not really doing that bad. And even the US numbers overall, I think, is doing really well. So that's really going to, create, this inflation fear to go higher. So that's a phenomena that we're watching. And I think it's important to take a look at these yields because we get tied up with, what the central bank's going to do this month. But remember, markets are looking what's going to happen in the future. So this is why a lot of times, unless there's a big surprise, a lot of these things are already priced in. So when you go in next week and you're all ready for the dollar to weaken because you think, oh wow, this is going to create great opportunity. Usually you see the opposite because that's already priced in. Now, if the future expectation is more on hold, and that's what we are seeing in the markets where they cut a rate, but then they go on a hold and say, well, maybe one, and then we'll see what the economy is doing. I think that's just going to keep these yields up, and that's going to create that difference between currencies that are actually doing worst are also the one they're yielding it lower. So I think that's something we need to pay close attention to, especially in the next couple of months as we get more and more economic data.
Thanks, Ankit. And when I actually have any questions about bond market, I go to Ankit. He knows much more than I do about bond markets. And I'm really glad you brought this up because, this is really telling the story. Look, we're just going to go down the line here. Here's the euro. Euro bond yields are breaking out to multi-month highs. We've got the pound, though, not looking great. So just looking at the correlation of interest rates alone, you would think that, okay, the euro is likely stronger than the pound. Let's go see if that's actually true. And then we go to stuff like the CAD, the Aussie, the Kiwi, and you can see they're really rallying off their bottoms. We should see that these currencies are doing the best in the market, which they actually have been for the last month or so. The anomaly here, so let me go through this again. Switzerland, yields not really rising. They're off the bottom, but they're not really rising like everything else. And then the US, not really rising as well. So when we take a look at all these bond yields, we can see that, okay, there's no question that we've got certain currencies, their bond yields are surging. And right now we have certain currencies, their bond yields are not surging. There's going to be a trade just based on this alone. These are pretty good correlations that we look at. The only one we really can't say is the same is the yen. Now this chart here, the yen 10-year government bond, we've talked about this. We've talked about how the yen was pinned down at zero. We were down at zero. We've been at zero forever. This is 0.15. This is negative 0.25. Look how long Japanese bonds have been priced really low. And at this point, we've got this real big rise. The Japanese yen should be soaring, but it's not. Why is that? Because people are really worried about this carry trade, the Japanese yen, the Japanese bond market really unwinding negatively. So people are not rushing into the yen, but these higher interest rates are putting a little bit of a floor underneath the yen. So these are all things that we're going to be taking a look at here this week. There's just a lot of stuff going on, and that always makes for a good trading opportunity. Here is our Bitcoin basket. We saw downtrending action, moving averages going down, everything going down. We held some support here, and you could say, oh my gosh, look, it held support, it rallied up above, but boy, this is not great price action. If it holds here, if it can hold here and then work its way up and push up above moving averages, you know what? I'll become bullish then. But right now, technically, cryptos are a sell. They're just a sell across the board. Let's talk about next week. Lots of central banks next week. We have first, RBA. RBA is not supposed to cut rates. They're supposed to stay. We'll see what they say. I like Aussie on the long side, and I'm really hoping for a sell-off after the RBA statement because I would like to be a buyer of that sell-off. So I do like Aussie, but I'm really hoping that the RBA comes in, puts a little cold water on it, have it pull back, give me a good opportunity to jump in. Really the same thing with the CAD. I like the CAD to the long side, not as much because it really hasn't been great until Friday. So it hasn't been showing out performance as long as something like the Aussie. But same thing here. Any pullbacks on CAD, I want to be a buyer of for sure. Third central bank, we've got the FOMC on Wednesday. They are looking to cut by 25 basis points. That's pretty much guaranteed here. And then the fourth central bank is the Swiss National Bank. On Thursday, they're at zero. They're looking to stay at zero. I don't think we're going to get a move, but the question is, do they talk about their currency strength? And I think that currency strength is really hurting their company, and I think they want to do something about it. That being said, they are definitely gun shy from when they tried to intervene. Anka, what was the year they tried to intervene? Was that 2016?
Is it for the Bank of Japan?
No, the Swiss National Bank. When did they try to
Swiss.
peg the euro to their
That
currency?
was 2015.
2015.
So the notable years were 2011 when they did the peg at $1.20 against the euro, and then the 2015 is when they removed that peg. So yeah, those were significant movements on those years.
And I read that after everything was said and done, it cost them $680 billion in losses, and they didn't really do anything. So I think the SNB is really hesitant, but everything's going the wrong way in their currency. So we'll have to see what they say. But the market is already saying that it's likely going to be something where they want to do some easing here. So lots of central bank movement, not a whole lot of economic reports. So let's get into all the currencies and score them from +3 to -3 and find out where we're going to hunt here for the day. Okay, here's Bitcoin. The only good thing I can say about Bitcoin is, hey, it didn't make a new low. And it had a pretty decent bounce off of this low. The problem is it spent 12 hours, 12 whole hours above a resistance line before plunging back down below it. At this point, I don't see any reason at all to be long Bitcoin. There's just no reason whatsoever. If you want to be long a crypto, it's Bitcoin Cash. I'm not a huge trader of Bitcoin Cash. I've traded it a handful of times. But if you're going to go long a crypto, this is it. This is it. And it broke out and it's coming down and it's giving you a pullback to a breakout point. Technically speaking, this is a decent trade. We've got moving averages that have crossed and are sloping higher. This is a technically good trade. That being said, the whole basket, again, we talk about individual trades, but we also talk about the macro picture behind them. When all cryptos are going down and you have one crypto that breaks out, those breakouts typically don't have a lot of strength in them. When you get a breakout with a lot of strength in it, it's when all the cryptos are surging and all the money's coming into crypto, and then you get a breakout on one of them. That's when you get the follow through. So I just don't like crypto in general. But if you are going to make a trade, it looks like it's going to be Bitcoin Cash. Ethereum, same thing. Popped up for a day and then spent the next 2 days trying to give it all back. You can see Litecoin didn't even make a decent bounce. I mean, we did not even get back above the prior high. So Litecoin looks the weakest by far. So you can see I'm not really bullish on cryptos whatsoever. And frankly, I think you should be looking at FOREX because I think FOREX looks awesome here. And if you've listened to me over the last 2 to 3 weeks, I've been kind of saying, hey, FOREX is boring. FOREX is boring right now. Low volume. Look to trade less, not more. I'm completely shifting my opinion on that. Ankit, take us through the dollar.
Well, let's just start with the dollar movement here. And I must say that this really surprised me as, dollar has been holding it really well starting September. And despite those rate cuts, it's been above the 20 to 50 moving average. All pullbacks were getting bought out. But this time around, we didn't really hold that support. Now, the reason why I was surprised a little bit with that as well, because again, I follow bond markets, bond yields, and usually they kind of follow along, but then now we're getting a disconnect here. So We are getting a -2 on the dollar here. The big question really is that is the downside limited? Are we getting that selling pressure going into the Fed rate cut next week? And based on what we've seen in the past, even back in September, once we got that rate cut, actually that was a turning point for the dollar. So I'm not so 100% sold on the dollar's weakness. I think dollar could be the downside could be limited, but we'll see what the FOMC have to do with that. But for now, you can see velocity on the downside. So I'm gonna put the dollar on hold until next week when we get the FOMC.
Let me jump in real quick and just agree with you 100%. The dollar looks like it's broken this uptrend. I totally agree. And if you want to be long or short dollar, you should be short. But I totally agree with you that the downside is likely limited. That the bond yields are still high, the economy's still good. It's still a decent story for the dollar. So I just don't like it short here. So that's just my 2 cents.
Yeah, absolutely. And remember, one thing we always talk about is comparables. Now, when we take a look at other currencies, well, for the first time, we actually have a lot of other currencies that look actually way worse. So, starting with the yen, I mean, look at that. It's a beautiful short side on this one. So, remember, when we have seen dollar really underperform, those were the times when we saw money going into the yen. We saw a bit of an opposite. Right now, as you can see, the dollar looks weak, but yen actually even looks more weaker. This is a much weaker trend. It's a -3. And, despite of that rise in the yields and the expectation for Bank of Japan to hike rates, all of that stuff is already out there. That's not a surprise. But you can see that the price action at the end of the day is the king here. So far, you can see it just continues to be in a downward pressure. So we still like yen to the downside. Now, compare that yen to Swiss franc. I mean, now this is my next new good short over here. This is again, compare this to the dollar. I mean, I know dollar was weak this week, but guess what? Swiss franc was equally weak. So for the first time, we are getting better candidates here on the short side. And you can see velocity is a -3 and trend is a -2. And I don't even remember the last time we saw this kind of scoring in the Swiss franc. Especially going back all the way this year, Swiss franc has actually done really, really well. Now, this is something me and Rob were talking. Like, it's ironic that we are seeing a big change in Swiss franc, ahead of the Swiss bank meeting next week. So I really wonder if there's something, expected to happen in the markets or a change from Bank of, Switzerland here. So this is again a good pivot. We always like to pivot when things are turning around. And right now, the Swiss franc is definitely turning lower. So we want to keep a close eye on weakness in the Swiss franc. Now, euro is following suit, but you can see that Swiss franc is more underperforming here. You can also do a comparison and take a look at euro Swiss franc. And it's again, same thing. Euro Swiss franc is holding it a lot better, giving us an indication that Swiss franc is a better short compared to the euro. So those are the top trades we're going to take a look at going to next week with those central banks. Now, talking about pound, I would say I'm going to put the pound on the shelf here. Not so great price action. That line that you see on the resistance line, if you look back in time, that's a resistance level that we have tested multiple times this year and it hasn't really broken out. So I don't really like a breakout on this one. And I don't really like a short on this one right now because it just kind of, you can see the moving averages are flat line here. So not a currency I want to trade. I think there's better options out there. Now, talking about better options, I mean, take a look at the CAD. I mean, CAD is doing very similar to what the dollar is doing. And again, this is something I want everyone to watch out for next week as well. But remember, take a look at the CAD. CAD has been following the suit with the dollar. And this did pull back to the 50-day moving average. And then look at that big jump right there. I personally wouldn't be surprised that next week or in the next 2 weeks, we see something similar with the dollar. So I think CAD looks a lot better right now. And a breakout looks imminent going to next week, even though we get the Bank of Canada. I think they'll probably be on a hawkish hold. Now that's going to help the Canadian dollar here. So I finally do like the CAD to the upside. Now Aussie, I'm agree with you, Rob. Like this is again a currency that is continued to outperform. Beautiful high base that lasted for almost month and a half, and it's breaking out. This is where I think those pullbacks like to get bought. So I only like this on the upside here, and I think those when the pullbacks are happening, it's good to be on the sideline there. And then lastly, the Kiwi. And remember, Kiwi is another currency that I got really excited about because we got that rate, with the recent RBNZ rate statement. They cut rates, but they said, you know what, we probably won't be cutting more rates in the foreseeable future going into next year. So that really puts a floor in the Kiwi. But right now, you can see it's just consolidating. So maybe it needs a little bit more time, but I do like how the moving averages are turning a little bit. I think that will be another currency that I'll be paying close attention to. So finally, when we take a look at this whole currency baskets, it's doing exactly what it's supposed to. The growth currencies, they are strong. The safe haven currency, they're actually down. So I think for the first time, you were really getting a good picture here for what they're supposed to do. And unless anything changes in the market, I think this trend will likely continue into the year end. Back to you, Rob.
Thank you, Ankit, and great analysis. And you said exactly what I was going to say, is that right now, all the correlations, everything is working as it should. And when that happens, that's typically when you get the nicest, smoothest one-way moves. Now, look, we all know anything can happen in this market, and someone could come out and say something, or some natural disaster can happen. But at this point, I like this as one of the best setups of the year to be long the growth currencies and short the currencies of safety. I just think it's a really clear trade at the moment. I don't see any reason at all to trade pound. I just don't see any reason to even discuss pound because there's so much clarity elsewhere. As far as what's strong right here, right now, the Aussie CAD is number 1 and 2 on the list. And the weak side, I actually like Swiss franc and yen on that weak side. So, Ankit, I think we're going to be pretty much in alignment here. I'm looking at Aussie yen, Aussie Swiss franc, Kiwi yen, or CAD yen, CAD Swiss franc. Let's take a look at some. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Remember, whenever we have currencies that we want to go long and we're trying to decide between them, just pair them up. So we say, okay, Aussie CAD. Aussie CAD, do I want to be long Aussie or long CAD? And you can see on a daily chart, you can see that we just got up to the top end of a range. So the Aussie has clearly been stronger than the CAD until today. The big question is there going to be follow through on the CAD after its big move today? I don't know. For me, I would still look at this and say I'd rather be long Aussie right here, right now. Give me 2 days to see if that CAD can add on to its gain. But for me right now, everything's saying, okay, yes, CAD had a big move, but really Aussie has been the place to be. Moving averages are still sloping higher. And then the question is, okay, which one is better on the downside? Swiss franc or yen? You can see here is telling you that, okay, over the last 2 to 3 weeks, Swiss franc has been a little bit weaker than the yen, but overall the yen has been the weakest. Now that being said, this is where I look at currencies and I say, okay, what's the easier trade? Right now, I do think the yen is a tricky trade. And I'm just going to pull up 2 charts here. I'm going to pull up dollar yen. And I'm going to pull up I'm even going to go to a 1-hour chart. And again, what I'm looking for is smooth, continuous trends. So over here, choppy, choppy, choppy. Here's one smooth trend, but it got erased, really quickly here. These are okay. This is an okay trend, but let's go ahead and take a look at dollar Swiss franc. It's like, okay, dollar Swiss franc was bearish here, but since then, it's been a pretty good trade. Run up higher, pull back less than 50%, make a new high. I just think this is the easier trade on Swiss franc. So for me, Aussie Swiss franc, is going to be my trade. Take a look at it on a daily chart, breaking out of some major levels. Everything looks really nice here. Okay, maybe we're going to run into some resistance up here at 53.70. After that, maybe at 54.50. Okay, that's fine. That's 0.8% away to the first level, and 1.5% away to the next level. So this one is, to me, clearly one way. So how do you enter one-way trades when they're really running? Well, this is one of the harder parts of trading. You know that, hey, I've got a currency, and I'm just waiting for a pullback. You could have been waiting for a pullback for the last 2 days and never gotten it. This is where I really like pyramiding into trades. It looks overextended here. And again, and that doesn't look like it. All technicals say this is overextended, but it kind of looked the same way here. And look, you got 2 candles. Do you really think you would have bought in after 2 candles down and then you bought back in? Probably not. These one-way trades just don't really give you a lot of opportunity to get in. I mean, every one of these candles is 1 hour. I mean, boy, if you're waiting for a pullback during this time, you just missed out on almost 0.8% of a move, which is a nice move. This is where I really like to get into a portion. So I take a third of a position, I take a half of a position, and then I say, okay, if I took a third of a position, I've got 2 more third of a positions to enter. If I get a pullback, I'm going to enter another third. If I get a high base, I'm going to enter another third. I'm just waiting to build that position because I think this has multiple days to run. It gives me the opportunity to be patient. I get into some, and then I wait for those pullbacks. And if I never get those pullbacks, yes, I only make my nice gain on a third of a position, but I got something. I identified the trade. I went in, made some money off it. Okay, I wasn't able to get more capital into the trade, but at least I got into it. So I really like, again, pyramiding here, getting in. I know it looks overbought here, but it's looked overbought for a long time. Take a teaser position. Take a third, take a half, and then reserve that capital. Say, okay, I was going to buy 100K. I'm only going to buy 50K, and I'm going to buy another 50K either when it breaks out above this 53.40 or if it does pull back into this 53.20, 53.20, 30 area. I can be aggressive here on a pullback and add my other half of the position. Then you get a much better cost basis to hold on to this. So for me, Aussie Swiss franc is the trade. Onkit, what do you want to take a look at?
Hey, Robert, I agree. I mean, I'm looking at most of the things that you looked at. On the top of that, I really like CAD yen, CAD Swiss franc. I think those are the areas we're going to continue watching. But let's start with CAD yen. Starting with the daily chart, you'll notice that this is just a good point. Like we're looking for pivots where things are breaking out, and maybe that's where they are going to get a little bit more directional. As you can see that this thing, it's at this level where there's not a whole lot of overhead resistance on this. So going back to the same thing, I think these are the ones I would love to see a pullback, early next week to buy into, but we might not even see that. We might just see a little base. But I really like CAD yen the way it's behaving. Second one is CAD Swiss franc. It's the same exact. I think all the Swiss franc crosses kind of look very similar, but daily chart you can see it was in that congestion zone. It's been above look at the moving averages. It goes all the way back to March. We have been below the 20 to 50 moving average. So we are finally above it. And if you really look at the CAD Swiss franc, today was the day where it did break up above that resistance. But I think there's more room to this. But the question is where do you want to get in? I would love to see a pull back to sort of buy into this. So this is again another trade I'll be looking at next week. And then lastly, Euro CAD. If you are undecided between Euro and Swiss franc, but I mean same thing. This thing also breaking out of that congestion zone. So look at that congestion. We have been in that congestion pretty much starting September. So that's a lot of congestion to kind of work through. And now we're getting a break. So remember, these pivots are important because now we're getting a lower high or lower low and a lower high. So we want to take advantage of this, look for those bear rallies, look for bases to get into. But I'm really looking at this. But on the top of that, remember, we have a busy week next week with still a lot of central banks. So we want to also make sure that we keep the powder dry and look at those events as well, because I think we'll probably get a good trading opportunity. Dollar Swiss franc, Rob, is another one that I would like you to build up. Now, the idea is very similar. Now, the question is, if the Swiss franc stays pretty weak, and if the dollar does bounce, just the way we have seen the dollar bounce, or the CAD bounce this week, I think for the first time, I do like dollar against the Swiss franc. Now you can see that this thing is kind of going sideways. It's above the 20 to 50. But now, talking about setups here, let's go on a 4-hour chart. Even though we had a pretty lousy week in the whole dollar. I mean, take a look at what dollar Swiss franc is doing. It's actually above the 20 to 50 moving average. So I think for the first time, I do like dollar Swiss franc onto the upside. And again, remember, this is something I'm looking at for the FOMC. And if the dollar does strengthen off the FOMC, well, guess what? This is a pair that I want to get into. Dollar Swiss franc again on the goes on the top of my radar here. And I think as we get more and more data next week, I'll be looking at those individual currencies and pair them up accordingly. So euro dollar, Rob, maybe that's another one you can pull up, kind of following the same theme. I mean, take a look at the euro dollar too. Now, this thing is right up against that resistance level, but you can see that maybe 117 is where those gains are capped at. And I think on the bottom side, we have about 115. So decent risk to reward. This thing, is again, doesn't look as good, but on a 4-hour chart is where I'll be looking at, more opportunities. But right now, as you can see, we've been above the 20-day moving average since the end of November. And now that's kind of breaking lower as well. So I think this is, again, following the same theme, probably like to pull back further. But Euro Swiss franc, Rob, is another one that you can take a look at as well if you are not sure which one is strong versus weak. And I mean, take a look at this one. Euro has, since it bottomed out on the daily chart, you can see that Euro is actually doing a lot better compared to Swiss franc. This is, again, one of the reasons why I do like Euro, the Swiss franc over the Euro. I mean, take a look at that conversion of that moving averages. 20 is now above the 50. And that's, again, giving us a signal that, hey, this is positively, this whole downtrend is actually turning the other way. So I think next week, this is another pair you want to pay close attention to, especially when we get the S&B policy statement on Thursday. So that's all I have for now, but we'll keep everyone posted next week. It'll be a busy week.
As you have all been listening to us for whether it's years, whether it's months, whether it's weeks, hopefully if you've listened to us long enough, you can tell just by our forcefulness, when is the tide coming in and when is the ebb. So we talk a lot about ebb and flow in trading, especially in currencies, how sometimes currencies is an ebb and we don't want to be trading all that much. We've just gone through a little bit of an ebb for the last couple of weeks. I think this is just a great opportunity. I think you want to be more active this week. I think it's going to be a great rest of the year. I think December is going to be hopefully our best month of the year. I think it's setting up for it. Great movement across the board. So I'm really excited. Thanks for joining us. Everyone have a great weekend. Goodbye, everyone.